Morgan Stanley's Katie Huberty says the, quote, everything rally will persist for now, but given the rich asset valuations, they suggest own quality, which is obviously extends far beyond the mega caps. We totally get it. Major averages in this quarter, we should show you just to give you the scorecard really of where we are. In Q3, the S&P up 7%. NASDAQ's up 10.5% in the quarter, the Dow up 4.5%, and the Russell, Amy, is up 11%. Yep. So as we're talking about, okay, earnings going to be good, Fed's embarking on rate cuts, and maybe the broadening trade's going to work out, does the fourth quarter end up looking a lot like the third, or no?
I'm not sure at the fourth quarter. I mean, I think the rally does continue. I don't think it continues necessarily at this pace.
Everything rally.
But it's not only the U.S. Ex-U.S. is doing even better. I mean, I've spoken about Santander on this program many times. It's up 130% year to date. So, like NVIDIA, as to Josh's point, isn't one of the best performing stocks in our portfolio this year. It's Franco. It's ABB. It's IonQ. I mean, it's a broad. I have almost over half the portfolio up over 20% year to date. There's a lot of stocks that are working really, really well, including the financials and Goldman and JP Morgan, which, as you'll know, I just trimmed as well and added to Berkshire. But there's just a lot of good news now baked into a lot of these stocks that we've had major moves. Goldman's up 70%.
Is that why you trimmed Goldman and JPM?
Yes,
because of the moves that they've had?
Yeah, over the last 52 weeks, Goldman's up 70%, JP Morgan's up 50%, Berkshire's up 10%, to Josh's point. So we took some out of those two names, put it into Berkshire. But we also own a lot of Japanese banks that are doing really well.
What do you make of the way Berkshire's traded since Mr. Buffett made the announcement he did?
I don't think it's that surprising that it took a pause after he made the announcement, but I really think Berkshire is like insurance. I mean, it's insurance literally, but it's also insurance if you do get a slowdown in the economy, if you do get the market rolling over. They have a huge cash pile that they could put to work pretty effectively. I think the team in place is totally qualified to do that.
I think everybody's trying to assess where the best places to be are for the remainder of the year, whether it's sector or individual names. And you know, some firms on Wall Street are out with their own list today. Some of the names may not surprise you. For example, UBS has their highest conviction calls. Okay, Amazon's on the list. Everybody owns Amazon on this show. I think it's interesting. Disney is on their list. So if people looking for names outside of the Mag 7, well, here's your Disney.
Wow, fireworks.
Yeah, well, you know, Disney had a great start to the year. It's kind of consolidated here. I almost said sputter because it's on the border between consolidating and sputtering. It needs to get some mojo back. The only thing that's going to do that is earnings and the sign that streaming is picking up more and more steam as linear declines. And streaming should be picking up steam, not just from the regular content, but from ESPN. Obviously, the theme park's doing well. And I think what we're talking about right now...
You didn't even talk about Succession, which is the biggest issue hanging over the whole story.
Listen, it is a very big issue. I don't think that it's make or break on the stock. I think it's important. I'm not saying that, but let's face it. There's some very talented people behind Mr. Iger. I mean, there's Josh D'Amaro. I might have got his name slightly wrong. Excuse me. The theme parks. There's Dana. I'm sorry, forgetting her name. The TV and film. Thank you. Sorry. There's a very talented bench.
Note to self: don't mention names if you don't know the names.
I got half of it right. Give me some credit there. Also, I knew with a good team like this that I'd get back up. This exactly is what I'm talking about. If you got a good team, you got backup.
Yeah. Like note to people on a debate, for example. Don't make a list if you can't remember the list. You know what I'm saying? You know what I'm talking about.
We do.
All right. AppLovin is on the list. Joe T.
It is. And I talked yesterday on the show about the skepticism that I still think is built in the stock price in the analyst community. The price target way below the current price at $700 today. In addition to that, the ad platform continues to grow. They're delivering on the revenue growth. There was a point several weeks ago I was skeptical that this could continue. Thanks heavens that Joe T is a rules-based strategy, kept us anchored into that position, didn't allow me to make a foolish move.
Snowflake is on the list.
Snowflake, a software name also related to AI, getting that bump, has done really well year to date.
Well,
very, very expensive.
It's differentiated itself from some of the other software stocks in the conversation over whether, AI is going to kill software.
Right.
It's definitely hurt some software stocks, not this one.
Right. No, you need Snowflake to organize your data and to make sure that you can use AI. So it has differentiated itself, and it has a unique position. You're paying for it, though.
MasterCard?
Yeah. Listen, MasterCard's been one of our longer holdings for the better course of the last 4 years. Now you're hearing both Visa and MasterCard enter the conversation as it relates to stable coins. That might be a tremendous opportunity for two companies that are well diversified in their model.
Do I have any interest in Wealthfront, the company filing for an IPO? Obviously in the fintech space. We've talked about it on this program before, and I think we did numerous times, this sort of robo-advisor, automated investing almost. Josh, I know you have thoughts on this. And so now the company's going to go public, and we've discussed this with you before, both the concept and the company.
They have to go public. They have VCs trapped in this stock for 13 years. This marketplace was not supposed to develop the way that it did. If you rewind back to the 2012, 2014 period when these robo companies first came along, they were like very good at what they did, but they were a little bit too vocal about it. And what ended up happening was Vanguard and Schwab decided, hey, we could do that too. And then Merrill Edge digitized, and then Fidelity. And of course, there's Betterment out there as well as the other standalone. And what ended up happening was robo-advice became kind of this like commodity offering that everyone has. SoFi has it too. Robinhood has it too. So there's really nothing that they do that's unique. They did have a head start by virtue of how early they were founded, but that really doesn't matter anymore. This is basically just a marketing CAC business, like how much money do I have to spend to get my next 1,000 clients? And that's never a great business. I think it's notable that Wealthfront tried to sell itself to UBS. UBS preferred to pay the breakup fee and get itself out of that deal rather than consummate it. I don't know what they saw that spooked them. So now a couple of years has passed since then. And finally, you have the type of tape where Robinhood's making record highs, SoFi's exploding higher. It's a tape that's more hospitable to these types of fintech investment sort of platforms. So I think it's great timing to be selling it to the public today, just because people want these types of companies. I don't know that that means it's going to be a great investment once it comes out. So this is the type of thing where I'd rather just be a spectator and we'll all find out together how much appetite there truly is for a business like this.
Yeah.